Stocks are indeed oversold, and I think they are ready for a bounce. We'll look at the advanced decline line as it moves up before S&P 500 setting up a bullish divergence. I will explain what I mean. Is gold topping? It's possible that gold is topping. However, we did do a few trades, and we will give an example of a recent trade for Kinross Gold. Congratulations to subscribers. Copper also is breaking to 2-year high. Is this some sort of a supply disruption, or possibly maybe it's a good thing? Who knows? And oil, we'll look at oil, which has found resistance and could drop further despite all of the nasty news from the Middle East, etc. All this and more in today's edition of MasterChartsTrading.com. Market recap for Friday, April 19th, 2024. As always, hit the like button, subscribe to this channel, share this video, make a comment, ask any questions that you like, and I will hopefully get to them. Throughout the presentation, I'll be using MasterChartsTrading.com proprietary indicators, which you can find out more by following the description, a link in the description, and signing up at my site. All right, let's get to it. So looking right now at S&P 500, we're looking at about half a year or so of data. This is October low. Notice that what happened is we bought right around this blue support resistance line. So these are the indicators I was referring to, this green, blue, red, and yellow line. And notice what happened. We S&P 500 dropped below this blue line and then rallied above it. So we bought it there. I personally bought it there as well. I still have a position open. I bought it right there at S&P 500 ETF SPY in October of last year. I'm still holding half of my position. I sold half back in January because I didn't really expect this rally to keep going till now. This rally really surprised many analysts, myself included. However, looks like nothing is, there is no such thing as this time is different. So yes, we really rallied for a long time, but if you look at the statistics going back, decades of data, there is a few examples where rallies continued, for more than 6 months or so. We've been at it for about October, November, December, January, February, March. So about 7 months now. We had rallies that would continue for like 12 months or 18 months without actually pulling back significantly. And what's a significant pullback? I'm using my indicators, so for me significant pullback would be the blue line. If you don't use my indicators, you can use the exponential moving average, or just a simple moving average at 200 basically. And 200 is also a decent place to for a stock market to pull back to. And notice that my indicators, the blue line and the yellow line, which is now which is signifying 200-day moving average, they're very close to they're very close together. I'm not using my indicators, or my indicators are not based on the moving average, but it's also a reasonable place to be buying. Okay, so this rally that we're still in the middle of really continued unabated basically for about 6 months or so, and finally looks like we did indeed tap out, at least for the time being. So I'm going to zoom in on this price action at the latest price action here. So the high was set right there on Thursday the 28th of March, and then notice this gap down between Monday the 1st of April and Tuesday the 2nd of April. A gap down
at the highs is not a great sign, and it was filled immediately in 2 days later on this big candle here for April 4th. However, notice the way this April 4th candle looks. This is a clear example of a bearish engulfing pattern. So the April 3rd candlestick is completely engulfed by this giant April 4th red candlestick. Bearish engulfing, classic bearish engulfing at the top of the range or near the top of the range. And then eventually a few days later, I mean, we tried really valiantly to bounce, even here on the 10th of April and 11th of April. I was like, okay, looks like we found support here. But then finally on the 12th of April, we broke. And this 12th of April breakdown was below this close for April 4th. And notice what happened afterwards. We had like this waterfall event, which just unraveled, you know. A few, what is it, 1, 2, 3, 4, 5, 6 days of non-stop selling. So at this point, we broke the support that was set on April 4th. We additionally broke support that was set by my green line, and you know, for me, the green line is it's like a basic place to take profits. So if you had a position that you were holding for a long time, for example, from back in October, this would be a very good place to take profits. And obviously many people did the same thing, so price continued lower. So what are we looking at this point? We are definitely oversold. Okay, so this drop is very steep. I mean, I'm gonna look at this weekly. This is a weekly candlesticks. So notice I actually put in this dotted lines on the week of April 8th, and we're definitely there. Just notice that we had 3 weeks of non-stop selling, and this latest week was really big red candlestick. So those big red candlesticks, they do look scary, but they could also indicate that we are attempting to bottom, like a selling climax of some sort. So I'm going to get to a market breadth in a few seconds, but generally speaking, after a big rally like this and a sharp pullback, a bounce is quite likely. And the question is when, well, of course, two questions. When will this bounce start? Is the bounce already starting? And if you're a subscriber, I will also cover in the subscription-only video utilities, because I was looking at utilities, and utilities are actually bouncing before S&P 500. In my mind, when utilities bounce before the rest of the stock market, I think it's a good thing, because utilities borrow money heavily. So it could imply that we will see rate cuts sooner rather than later, and rate cuts are normally good for stock market. So that's just something to keep in mind. But looking at this chart, a very long advance, a sharp pullback, and this is a recipe for a bounce. Question is, again, when will it start? And question number two, how far up will it go? Will we make a new record? Okay, so this is an important question, and I mean, if we bottom, if this is indeed the bottom, question is, will we bounce towards records and make a new record, or will we get to the, you know, like we will bounce a little bit and maybe get to like the previous broken support at the April 4th lows, or potentially not even that far. Maybe we'll just get to my green line, and then we will continue lower. Okay, and if we continue lower,
the next very strong support would be at the blue line. So the blue line is currently at, for S&P 500, 48.08. All right, again, I can turn on the 200-day moving average. The 200-day moving average is 47.30. So this area will certainly be an area of decent support. In fact, I get very excited when stocks drop from highs towards the blue line. This is exactly where I bought my previous position. Notice the highs back in July of 2023, and we came down in this wave-like fashion, and then we bottomed out right around the blue line. We weren't, and this is where I would be buying. I bought myself there. So again, a drop towards this blue line is about 3.5% from today's price levels, and it's not anything out of the ordinary. This is again a garden variety pullback. This happens all the time. There's no new paradigm. There is no such thing as this time is different. Nvidia is also coming down towards Earth. It will probably bounce, but we just don't know at what point. So looking again at this chart, where I am currently expecting a bounce, but how high will it carry the index is a very, very good question. So let's try to look at some of the one of the market breadth indicators that I like to use and see what's happening there. So what we're looking at here is the following. This is an advanced decline issues for New York Stock Exchange composite on StockCharts.com. This is StockCharts.com interface. Ticker symbol is $NYAD. Okay, so advance, and it's actually not a dash, it's actually a minus sign. So advance minus declines. We take the advances, so every day a whole boatload of stocks advance, go up, and a whole boatload of stocks decline or go down. And what we do, and there's also some unchanged ones, but let's just pretend that we're only dealing with advances and declines. So we take the advances, a number of stocks that advanced, we subtract from that a number of stocks that declined, and we get a number. And it's a bounded number. Like there is only so many issues or stocks, or there's also closed-end funds, there's also ETFs that are traded on a New York Stock Exchange, and they're all called issues. So how many advancing issues and how many declining issues. So we take that number, we take the advancing issues, subtract from it the declining issues, and we get a number. Further, we will take a 10-day exponential moving average of that number, and we plot it here. So this choppy line here is a 10-day exponential moving average of the advanced decline line. Why so complicated? Because we can, I'm going to show you what it looks like if I don't have the moving average. And you can see that it's just like this scatter plot. It's very difficult to follow, but it is more or less bounded. Like, for example, you can see that it's bounded about 2,500 at top and minus 2,200 at the bottom. So to simplify our lives, we take a, what do you call it? We take a 10-day exponential moving average of advanced decline issues. All right, you with me? If you're not following, you can actually read up on it in chart school. Just search for advanced decline. All right, so what does this chart show? This chart shows that generally speaking, when this line, the advanced decline issues line, drops somewhat significantly lower, so I have chosen this numbers around minus 600. There's the 0 and there's the plus 600. So minus 600 seems like a good number to indicate for sure oversold. So for sure oversold levels is below 600. I mean, sometimes stocks rally on less oversold levels, but quite very often the stocks rally on significantly oversold levels. And indeed, if you look back from August, September, October, November of last year, we had readings that dropped below 600, and we had at least a bounce. So for example, here is a reading back from August 2023, and it was below 600, below negative 600, and then we got a decent bounce into September of 2023. Does it happen always, and does it always go higher? No, because like for example, this bounce here on September 29th of last year, it dropped below the minus 600 number, but the bounce barely was there. It was like 1 day, and then we dropped even lower. And then we got even more oversold, and then we got a somewhat, okay rally, a few days of rally. Okay, and then again dropping lower and lower, and finally we got the decent, huge, enormous rally that we're still in the middle of right now. And again, notice that since then we really haven't dropped into this deeply oversold levels until very recently. So currently we have indeed dropped into this decently oversold levels, and in fact now market breadth actually bounced already. So the latest reading that I'm seeing is minus 259 here. It was a few days ago, it was minus 800. So it was deeply oversold, and then it bounced. But notice what happened to the S&P 500. Nothing really happened. In fact, we dropped further. So this is showing me that potentially this is already a bullish divergence. We're already the market breadth is leading stocks higher. So it's possible that what we're seeing here is because of the S&P 500 is heavily weighted towards large cap stocks, and a few of the large cap stocks, for example, Apple, of all the things, Apple, Tesla, even Nvidia have been under pressure, and they're gigantic stocks. So they're this top heavy index S&P 500 is pushing lower. I think at this point, two possibilities is that we have another drop by market breadth, which would imply a continuation of stocks lower, or Monday we actually gap higher. And what I'm hearing is there is some good news coming out of Washington. Finally, I think the deadlock has been broken as far as Israel, Ukraine, Taiwan, and even border security is concerned. And Mike Johnson, the Speaker of the House, made the right decision, in my opinion. Finally, took him a while, but better late than never, as they say. So a good possibility Monday we will gap up, or at least we might see something like a bullish engulfing pattern. So right now we're seeing this red candlestick. Okay, last candlestick was red. Maybe we'll see a big green candlestick on Monday that will engulf this. So I am moderately optimistic about next week. We might see a bounce. So what do you guys think? Do you think we will see a bounce? Do you think the news are actually okay? Make a comment below. I'd like to hear your opinion about this. All right, let's move on. Now we're looking at the dollar. So dollar currency index, DXY, is now moving higher. It's now in an uptrend again. It's in an uptrend because we have closed above the blue line, and this is actually all we really needed to know. In fact, we closed above the blue line in February, and but it was like, it was definitely close above the blue line, but then look what happened afterwards into March.
However, notice what happened in March. Again, I'm not making this up, and I'm not drawing these lines. They are drawn mathematically, so notice what happened. We touched this red line, and we rallied off of it. So when this happens, and I've seen this many times already, this is a very good sign. That means that bears were rejected. Lower prices were rejected here on March 8th, and we got a big rally. So dollar is moving higher. If you haven't heard, the yen, USD JPY, has dropped to like multi-decade low. This USD JPY is at multi-decade high. Same goes for euro. British pound is also dropping against the dollar. So dollar is gaining on all fronts. Gold is traded in dollars. Okay, so XAU divided by USD. If the bottom part of this equation, USD is getting bigger, shouldn't this currency pair be going lower? No, it's not going lower, it's going higher. Okay, what's going on? All right, so occasionally gold and dollar move together in the same direction. So this is gold, this is dollar. And down below here is what's called a correlation coefficient. Okay. By and large, it's a negative correlation. So if a dollar goes up, gold goes down. Dollar goes down, gold goes up. But sometimes we see they're doing the same thing. They're going in the same direction. And right this instant, we have the same weird period. We're going up, both in the same direction. So notice that correlation currently is high between gold and dollar. It's 62%. Notice it's positive. It was negative. It was normal, just a few months ago. But all of a sudden we have this weird correlation between dollar and gold. We have gold going up and dollar going up. Okay, so it's not normal, and eventually we will reverse into the normal relationships. We just don't know when again. But for now, we're looking at dollar gaining. I trust dollar more than I trust gold, to tell you the truth. And so I think that dollar will eventually weigh on gold if it gets high enough. But for now, gold is going up, or at least it's in an uptrend. This light blue arrow in December of last year, it was an actual alert. And notice that we were not stopped out. Our stop would have been at the red line, okay, and we were not stopped out. This latest purple arrow was not an actual alert, but if you have my indicators, then you can trade on your own. Giant rally into all-time highs that unfolded from around February till now. And what we're seeing right now is a possibility of a topping candle right there on the 12th of April. So there is a good chance that we're topping finally for gold. Now we can zoom in a little bit and look at the today's price action. So today gold actually closed at new all-time highs. This is an all-time record right there. Today we closed at 2392.07. Okay, so $2,392.07 for a troy ounce of gold. Okay, but two things. So number one, this big candlestick that looks like a rejection. So a very large tail out of the top, and it's a red candlestick on April 12th. And today also similar pattern. We have a relatively large tail of the shadow of the top, and we didn't close red, but definitely looks like we're seeing some rejection at this price level at around 2400. So are we tapping? I would, it does feel that way, especially with dollar gaining. I mean, what do you guys think? My opinion is I think we might be tapping at least for a while. So if gold pulls back, where would be
good, reasonable places to pull back towards. So again, green line, just a few percentage points away, around 2.5%. But I think the bigger support is about 8% away at the blue line. So something of this nature, I think, is quite possible. Again, make a comment. What do you guys think about this? All right. Now I wanted to highlight a recent trade that we did here at MasterCharts Trading. Kinross Gold, obviously a gold-related company. Alert was sent right there on March 4th. So again, I didn't send this particular alert in February, but we were able to trade some gold-related stocks. So a few weeks later, after gold started breaking out, March 4th, we got a signal. So what is my signal? My signal is if a stock drops below the blue line and then closes above it. Okay, that's really all I needed to know. And notice very nice move, basically unabated, and today we closed at a 52-week high for Kinross Gold, and that's a 27% move. If you got in, congratulations. Did you get in? Make a comment. Hopefully you did get in. So basically, this is all we do is that we just need these indicators on your chart, and once you have the indicators, you're set. You don't really need anything else. I mean, you can, if you really wanted to, like look at the earnings. They're not gonna hurt you, but it's really difficult to predict the reaction of the stock market participants to the earnings. They could be absolutely anything. I've seen stocks collapse on excellent earnings and rally on horrific earnings. In this case, earnings really didn't matter. We just know that Kinross Gold is a gold miner, and gold was going up, so we bought gold miners. So again, congratulations. Hopefully you made some good money there. I wanted to also touch upon copper. So copper futures, ticker symbol HG1 exclamation point on tradingview.com. We can look at it on weekly time frame. I think it's better. It makes for a more obvious kind of thing. So right now we're looking at the weekly chart. Weekly just means each candlestick is a week's worth of activity. Notice what just happened. We broke out above previous highs from January 17, 2020, from January 2023. This pattern also is quite bullish. So this breakout is very bullish, I think, for copper. We can measure the depth of this pattern, that one I'm highlighting, so the highs from January of last year to the highs from April of this year, and now a breakout. That's a 23% move, or about 81 cents move in this case. We can see that the projected move would take us to higher highs above the 2022, and I wonder if that is an all-time high or not. Let me just go back. Yeah, this is actual all-time high. So there's quite likely, if I'm correct, and if this breakout continues, we will make an all-time high above previous highs from March 2022. And what I wrote here is, what is the reason for copper going higher? Is that supply disruptions, or perhaps we have healthy growth coming up? Perhaps we have some sort of rebuilding to do after all the wars we've been having. Ukraine is badly in need of rebuilding, but we just need to stop fighting. Hopefully something will happen. I was saying this for the past 2.5 years. Maybe Putin will finally go away somewhere far. And now we have weapons coming in. Most likely there's a I would say I'm very optimistic about the vote over the weekend for Ukraine to get weapons. Maybe this will finally somehow speed up the end of the war. But in any case, copper going up, again, possibility of supply disruption or major stimulus. I mean, China have done this before. They just all of a sudden came out and let's build another, I don't know, ghost town. They can do that, yeah, and they need copper pipes and all that. So yeah, that's a possibility. Perhaps we'll just need more copper. The world will need more copper because we're growing. Alternative scenario, much worse scenario, of course, is supply disruptions. So hopefully I'm correct in the sense of that we will see good healthy stuff, nothing of the more unhealthy and wars, etc. Again, what do you guys think? Make a comment. Finally, I wanted to finish up today with oil, crude oil. So I shared this chart a few days ago. Is oil going? Oil went up on a rumor. Okay, so February, up until very recently, there was rumors of escalation of war between Israel and Iran, and finally it happened a few days ago when Iran decided to hit Israel with several hundred of objects, including drones and missiles, etc. And what I really liked about what happened is that even the regional powers that were not exactly friendly to Israel, but at least they were, like Lebanon, for example, they were knocking down those drones that Iran sent. So this is sort of a good news in the sense of it feels like Israel is at least not alone in this thing. And so the rumor is oil is going up, oil is going up, oil is going up because there will be more war. Houthis might start sinking more ships. There will be supply disruptions because Iran will close the Strait of Hormuz between Iran and, I believe, Oman, if I'm not mistaken, in the Gulf of between. Oh my God, I'm blanking out. I'm gonna go to maps. Strait of Hormuz. There. Yeah, so it's there's Dubai, this is Strait of Hormuz, Iran here, and so a lot of oil passes through this region. And if Iran decides to close it, which they can by just attacking the vessels or hijacking the vessels, then certainly I think 20% of oil passes through this area, and if that was to happen, then we would see obviously huge disruptions. I think this is Oman, right? It's not labeled. I'm sorry, I forgot the name of it. Anyways, by the rumor, oil going up on the rumors of oil disruption, oil supply disruptions. Actual attack, oil collapsed. Okay, there's a big drop there. Today, really interesting price action. Notice what happened. Oil made a valiant attempt to rally. Big candlestick. In the beginning of the day today, oil was at around $85. However, we closed at 82. Additionally, notice we closed below this blue support resistance line. So there's a chance we're seeing resistance here for oil, and perhaps we're done as far as supply disruptions are concerned. What do you guys think? Again, make a comment below. That's it for this week. week's recap. Thank you for watching all the way till the end. Again, don't forget to hit the like button, subscribe to this channel. If you are a subscriber, stay tuned. We will be covering a lot of stocks because a lot of securities dropped recently. So notice we have a significant amount of stocks that we're going to be covering in the members only section. If you are not yet a member, head over to MasterChartsTrading.com. Hit sign up one of the products. So I have now yearly subscription plans. The indicators are $24.95 per month if you buy the year's worth of subscription. So the indicators are green, blue, red, and yellow lines on this chart. They're available for TradingView.com. Again, once you have the TradingView account, which is free, sign up on my site. I will open the door for you on TradingView.com. You will have the same lines on your chart. In newsletters, I send out daily alerts and weekly members-only newsletter videos. So again, this week we traded all of these various securities. That's the newsletters, and then the best deal is to get both trading indicators and newsletters. And again, at yearly subscription at $14.95 per month, that's a very good price because you get 2 months free if you get the yearly subscription. Of course, you can do the monthly subscription as well. All of the trials have 7-day. All of the plans have a free 7-day trial, so you have a chance to cancel if you hate it so much. However, I know that I have clients that has been with me since 2016, so at least some sort of value I do provide. That's it for this week's recap. Thank you again for watching and have another great trading week. Bye-bye.